Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the Dow Industrials and the Russell 2000 this week, a couple of indicators, and then check in on interest rates and the dollar index. All right, so we had a pretty strong rally this last week, and you could see that right here in the industrials, the S&P and the NASDAQ 100. The Dow was up 1,644 points, 5.1%. The S&P 500 up 241 points, 5.9%, and the Russell 2000 up 919 points. No, did I say Russell? The NASDAQ 100. We'll get to the Russell in a minute. The NASDAQ 100 up 6.5%. So big, strong moves in here. When we look at the side-by-side between the industrials and the transports, you can see the snapback that we got in the transports up 956 points, 7.1%. Now, this had been down 7 of the last 8 weeks, and we got the breakdown of the trend line. I wouldn't be surprised to see this just continue to come right up, kiss that trend line goodbye, and then roll back over again. We'll see if we get that or not. But that's the picture we've got on the transports. You can see we were deeply oversold at the end of the prior week, and below the Keltner channels, below the 30 level on the RSI, and then boom, we're getting the kind of move that we got this last week. All right, let's go over here and take a look at the Dow Industrials. The daily view up 222 points in this rally on Friday. Every day this week was positive, and you can see the gaps, especially at the opening on Thursday and on Friday. Now, the interesting thing too, though, is when you take a look at the range of this last week, 1,626 points. We've had similar type weeks and similar type rallies since that January 22 peak. Take a look at the week of March 13th, the range, 1,937 points. Even bigger, 1937 versus our 1626. Right here in May, 1848. And then, yeah, we had a big one here in October coming off that lows right down in here. We'll see how much further we get, how much further we have to go. I believe when I take a look at the Elliott Wave picture in here that we're in intermediate wave 3. I've got this on the Dow Industrials, and I believe on the daily view that we have 5 down. Okay, so when you get 5 waves down, you're about to get a 3-wave counter trend move, and that's what I think we're getting in wave 2. We've had a pretty strong move in here, but there's no real corrective action going on in this 5-day move. Very, very minimal corrective action. We've already retraced, and I'm talking right in here, 2 versus 1. We've already traced over 50% of this entire move down. And I know some of you who maybe are, the Elliott Wave picture, you're looking at this going, wait a minute, you're not supposed to have wave 4 overlapping wave 1. I'm calling this a leading diagonal pattern. I think that fits in here. And that's what I'm saying. It's 5 down, and we're about to get 3 waves back up. Now, this may go even deeper. My first target was going to be this wave 4 right in here into this zone between 50 to 61.8%, but we're already there. So we'll see what kind of corrective move we get, and then another push. Okay, because this looks like it's going to be a zigzag as the way it's come back so sharply and so strongly. Okay, let's take a look at the Russell 2000. All right, I'm going to go back to the moving average view here, and I'll pull up IWM, Russell 2000 ETF, up 462 on Friday, up 1228 for the week. Okay, big strong move. I believe we've had our 5 down in the Russell 2000 also. And let's take a look at the weekly view. Now, for the longest time, I thought this was a triangle sideways, but I just could never get comfortable with this being an E wave and how deep it got. It never got above this high, but I think this count fits it better as a triple zigzag, a W, X, Y, X, Z. And yes, this is a legitimate Elliott Wave pattern, very complex sideways type of movement for what I'm labeling an A, B, C. So If we're in a C wave, this needs to be 5 waves down. I think we've just had the first wave down. So the first 5 of the first wave. So let me just move this over a little bit. Here's what I'm talking about. I think that this move right here is the first 5 waves, intermediate wave 1 of a 5-wave move within the big primary wave C to the downside. Now, a week ago Friday, I really thought the way we closed below this support levels in here, I thought, wow, this is going to break wide open. But this turns out this whole level, which is, where am I talking about with support? I'm talking about right here. The June 22 and the September, October lows created significant support in here for the end of this 5th wave. And now we're getting this strong move up off of that. And I believe we're going to get a 3-wave move in here. Now, the real question is, how deep is that 3-wave move going to go? I'm looking to see, let's take a look at the 130-minute time frame. Oh, that's the other thing that's kind of interesting, is when you look at the 130-minute time frame in here, you can see the gaps that occurred this week. And look at this gap right in here that to the downside that occurred on October 18th. Well, we just filled that gap right in here with the move that happened on Friday. Came right up into that, filled that gap. So 130 minutes, 3 bars to a day. Notice how, after a nice strong move, the first 130 minutes, we just kind of paused and then started to reverse, but really didn't go anywhere. Just kind of a little doji type candle for the last 130 minutes of the day. So that's the picture we've got in here. Let me look at retracement levels. Let me just do this. Let's go from here to here. Where are we talking about? The high on Friday basically got us to 38.2%. So this is a wave 2 like I'm anticipating. I wouldn't be surprised to see it get up in this 50 to 61.8%. But again, with this kind of a sharp move, I think we are looking at a zigzag. We'll see if that's the way the price action plays out. Okay, let's take a look at the high yield bond fund. Actually, before I do that, I want to show you something else. So let me go back to this, go to this view, and let's pull up the McClellan oscillator. Look where we sit on the McClellan oscillator. We are sitting at plus 283 when you round it, okay? We are extremely overbought, extremely overbought. This is the most overbought this year since January 13th at plus 295. And you can see there's not been too many other data points since the peak of back in January of 22, where we've had these kind of readings. They don't occur very often. And what was this peak? This was in May. Okay, so look at this January peak, January 13th. And what is this peak right here? February 2nd. See how it diverged? It was a lower peak. What did prices do for the next 2 weeks? Prices chopped higher. And they peaked Groundhog Day, February 2nd. Okay. I wouldn't be surprised at all to see a kind of a repeat of that activity in here. That we, with the kind of momentum we just had this last week, yeah, we chop around and chop our way higher maybe for the next week or two. And then we get the major pullback and we complete the wave 2. We'll see. We've had definitely strong breadth. When I take a look at the breadth readings every day, and I look at the percentage moves in here, back-to-back strong moves on Thursday and Friday in the 80s. Yeah, it was a pretty strong move that we had this last week. Okay, so that is the McClellan oscillator. Now let's take a look at the high yields. And yes, I was about to cough. I was about to get something in my throat. Oh my gosh. Okay, let's take a look at the high yield bond fund. Up 72 cents. Definitely saying risk on after this divergence that occurred in here into the low of October 20th. Very, very strong moves that we've had. up $2.05. Again, big ranging type day in sync with the kind of moves we've seen before for strong rally type moves. Again, we'll see we're coming back up into an area of pretty strong price action. We ought to get some kind of resistance in here. I would, if you think about we're right in the middle of all of this, that's not that much higher above what occurred on Friday. So we'll see, what does this run into and how does it act? Okay, that's the high yield bond fund. Let's take a look at the 10-year yield. Let me pull that up. Let me go back over here like this. And here's the 10-year yield. So, yep, dropping like a stone this week. We had the 5% from the previous week. We're intraday highs in here. Here's the weekly picture. Now, when I look at this, I say, well, okay, where could this pull back into? Look at this gap that occurred in here on September 21st and partially filled on September 22nd. But I wouldn't be surprised to see it pull back into this level. Where are we talking about? 433, 435. We'll see. We'll see what we get. But that is the picture on the 10-year yield. And so then when we take a look at the dollar index, here's how that looks. Look at the move that happened on Friday, down 1.103, and then for the week, down 1.538. Now, the picture that I'm using, the Elliott Wave picture I've got, is that this is intermediate wave 1, and we are in intermediate wave 2. The thing I've been skeptical about for days and several weeks, ever since this back down in here, these lows, I kept telling my members 23.6% retracement for a wave 2 just seems extremely shallow to me. So where do I think at a minimum we're going to get? I think we're going to pull back to the 38.2% level, right in here, 104.41, where prior support came in. If that doesn't hold, then I think we're going to get down into the retracement zone of a 50 to 61.8%, and I would target this area right here at 103 as possible support. And so when I look at what is this doing, it looks to me like an A, three-wave A, a three-wave B, and that we should get a five-wave C in here for corrective pattern. So we'll see. Does that play out like that? Right now, it sure looks like that's what it wants to do. Is it going to go down every day? I doubt it. I think it's probably going to chop its way down. A C wave needs to be 5 little waves. Okay, but these would be my targets if I'm thinking about where this thing could pull back as it continues to sell off. Okay, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a daily basis, head on over to joehenches.net, check out the website, check out the membership. Everyone have a wonderful week, and we'll talk to you on the next video.